Another week, another set of inflation data that sent markets tumbling. US inflation data for August came in at 8.3%, which is a decline from July's 8.5%, but above market expectations of 8.1% for the month, which led to a broad market sell-off as investors feared more aggressive rate hikes are to come from the Fed. In fact, investor sentiment took yet another hit as inflation data indicates the Federal Reserve hasn't even come close to bringing down core inflation, despite the aggressive rate hike so far. Cue panic and broad market sell-offs around the world. In a time where investment decisions and strategy decisions are difficult to make, given weakened investor confidence and economic factors weighing on the market, it's a good time to look at stocks that will remain competitive through these challenging market conditions. In an inflationary pressured market, investors generally flee retail, bank and technology stocks. However, Bell Potter has identified some key reasons to stick by some fast-moving consumer goods stocks in the current market environment. The A2 Milk Company has a buy rating from Bell Potter and an upgraded price target from $6.36 to $6.60 due to market indicators, recent performance and license updates. A2M was one of several baby formula producers that didn't receive FDA approval to help ease the baby formula crisis in the US, but A2M has other expansion plans on the horizon. The company's New Zealand-based manufacturer, Synlait Milk, received license renewal approval to continue manufacturing baby formula for the Chinese market on behalf of A2M until February 2023. This comes at a time where demand is surging in the Chinese market, with exports from Synlait up 259% year-on-year in July 2022. After beating analyst forecasts in FY22, Bell Potter also said if A2M can execute on its strategy to achieve around $2 billion New Zealand dollars in revenues and EBITDA margins in the teens, then it would imply compound-digit EPS growth through to FY26. Bega Cheese is another fast-moving consumer goods stock that Bell Potter maintains a hold rating on, but also recently upgraded its share price target from $3.45 to $4.05. Bega Cheese is poised to benefit from inflation-related product price hikes domestically, with the full benefit expected to be felt in FY24. Bell Potter increased its price target on this stock on the grounds of rapid downward correction in international ingredient prices, creating headwind for FY23, with a flow-through to farm gate pricing assumptions in FY24. With every share market dip, there is an opportunity to buy into the market at a discount rate. Headlines will be negative, however, it is important to reflect on your long-term investment objectives. Inflation is high around the world right now, and central banks are taking aggressive action to rein it in. Take this dip as an opportunity, dip in the market as an opportunity to buy in and diversify your portfolio across different sectors and asset classes to accommodate for higher market uncertainty. The other side of the coin is that interest rates are increasing on savings. Banks are often slow to pass on rate increases to term deposits, so make sure you are shopping around to make sure you get the best bang for your buck. Many investors are embracing cash ETFs, where the ETF manager is continually shopping around for the best rates for you. ASX code AAA may be one to put on your radar. Locally, the ASX had a bumper start to the week before investor sentiment plummeted after US inflation data for August was revealed. Stocks recovered some lost ground on Thursday, but it wasn't enough for the index to post a gain, as the key index shed 0.74% from Monday through Thursday. Coronado Global Resources led the charge this week, soaring 12.8% amid the rising price of coal. This week, materials stocks prevailed through the market turbulence, with the sector adding more than 3% from Monday to Thursday as commodity prices surged, with iron ore, crude and Brent oil each up over 5% this week. The catalyst for rising oil prices is based on the international energy watchdog expecting a rise in gas to oil switching due to high prices this winter. While iron ore rose after China rolled out new property policies in an attempt to boost housing demand and fix the country's real estate crisis. BHP, FMCG and Rio Tinto each added 3.3%, 5.3% and 2.2% respectively this week. Taking a look at the All Ords meal kit delivery company, Marley Spoon soared almost 28% this week, despite no price-sensitive announcements released by the company. Investors may be buying in amid a rise in food prices that the company is passing on. Leo Lithium also jumped 26% this week as the company's Mali-based Goulamina project is expected to be one of the world's largest spodumene projects, forecast to produce 506,000 tonnes per annum of spodumene in Stage 1 and increasing to 831,000 tonnes per annum under Stage 2. On the losing side, Lake Resources plunged 28.5% this week after the company revealed it is in dispute with its Machi project partner, Lilac Solutions, over agreed deadline dates by which certain stages of the project must be complete. The most traded stocks by Bell Direct clients this week were Dalrymple Bay Infrastructure, Pilbara Minerals, Boral, James Hardie Industries, Whitehaven Coal and APA Group. Investors also bought into Lake Resources and BHP while taking profit from Mineral Resources and Fortescue Metals Group. And the most traded ETFs this week were Vanguard All World ex-US Shares Index ETF, Vanguard MSCI Index International Shares ETF, and Beta Shares Australia 200 ETF. On the economic front next week, the RBA meeting minutes were released on Tuesday, which will give an insight into exactly how dovish the RBA is likely to be in the coming months. Overseas investors will be nervously awaiting the Fed's interest rate decision on Wednesday morning to see if the Fed rate hikes are as expected to be at 0.75% or a more aggressive 1%. And that's all we have time for today. I'm Grady Wolf with Bell Direct. Have a lovely Friday, enjoy your weekend, and as always, happy investing.